Hey guys, welcome to another video. Welcome to all the new watchers, the new viewers, and the people who follow me. So today I want to bring you a video just to bring you an update about the account. Okay, I believe it's been 1 week since I started trading. Now the results here is not updated. Currently, the account is at 30% profit. Now we were at a lot higher profit, and if you follow the equity chart, in the first day of trading, we got up to roughly about almost 100%. We're at 80% of the account. Now, I don't know why it's taking so long to update. This should really say 264, okay, but it's fine. No problem at all. So we are up 30% so far on the account. When this does refresh, please come and check it again. As I said, this is a challenge. We're having some fun with it. Of course, we're taking it seriously, but having fun now. Looking at this equity chart, I don't mind talking about it myself. I got distracted. I'll be honest, guys. I got so busy, and this is one of the biggest tips when it comes to trading, guys. No matter how professional you are, how many years, months you've been trading, always make sure you manage your time and always have a set time for trading. There were a few things I had to do, so I got distracted and I wasn't paying attention as I should. Okay, and the account suffered for it. We saw a massive drop from 80% down to 24. All right, now if you look at the equity growth right now, you can see the equity growth does say 35, so roughly around about 30 to 35% as of today. Now we dropped down to some lows here. If I go to the actual true growth, the account grew 16%, then roughly about 19, then we dropped down to -6, then minus 9.7. Trying to keep away from that 10% drop. We stayed around about 9. I'm trying to make sure that I didn't get to 10 or beneath. I want to keep it quite healthy. Now the absolute gain will change by itself. Okay. In the meantime, I don't know why this hasn't updated yet. I guess it's just maybe Hugo's Way server. I'm not too sure. But the trades what has been calculated, even though these numbers are not completely correct, I did have a trade on XRP. I think this is my open trades that were open. I don't actually have 7 trades open. I don't have any right now. Okay, so it's saying I don't have any open right now. So I'm expecting to see this updated and you guys will see the proper results. But I'll show you the account. There's nothing to hide here again. We always want to keep our integrity and make sure that you guys see what's going on with the market and when we're in front of it and the different things that are happening. But this is where we are at the moment. We're at 30%. My aim is to get this account to at least double by the end of the week because we have some great news coming out in exactly 30 minutes GMT time. 7 o'clock, we have the FOMC minutes. And I do expect the market to move quite strongly. For those of you who've been following the US dollar, you would notice that the US dollar's fundamentals are starting to catch up with the technicals, and the technicals are starting to react quite strongly with a bearish US dollar. But I don't think it's going to last. Personally, I think we're going to get some bullish action, and we can discuss that in some more detail. But this is where we are at the moment when it comes to this account. All right, let's switch over to the actual charts and let's see what the price is doing there and what we did. Okay, so now that we're on the charts here, let's go through all of the trades that we're in. Now, ignore my markings. We're just looking at the price action here of this structure here, but it's not important. So might as well recap over everything that we're in from the beginning. So our best trade for now, and we're looking to re-enter again, was CAD CHF. Now, CAD CHF, we took this based on we had a manipulative price action signature that we're looking for. Then we had the market structure breaking a return to that region. Then we had a very strong injection of liquidity for the long, but the price didn't reach the highs that we're looking for around about here. So when the price dropped back down here, back into the same order block, now I'm starting on the H1. So we got back into a H1 M30 kind of demand order block, looking for a buy. And so our trade really for what we had going forward was a long from, it was short-lived, but we had a long from this area over to here. Now, I was in quite a bit of drawdown for a while, and I'll have to always be honest and tell the truth. I was in some drawdown, but I had no worries at all. Is if you look at now the entries I had, if you go back on the account to cross-check this to make sure that I'm telling the truth, which I am, I had about, I believe, 3 to 4 entries long. I think I had like a 0.10, a 0.5, and then 2 more 0.10s lower down. Now, for me, I kept entering simply because I knew the price was still within the order block. So here is the order block here on the M30 here. We're still within that area now, and we potentially could continue to get along. But here's the story for the day. So we had a very strong long pending that we were looking for. However, we got into this area of range. And I think one good lesson you can learn for those of you who are aspiring to be traders or trading already and want to perfect and get better, and for those of you who already are trading, you're doing well and you want to just do better, is always an important reminder to understand the liquidity patterns of the market. Now, CAD CHF as a pair, you can consider a US European pair. But its liquidity time will be within the Canadian Toronto session, which is very, might as well call it the US session as well. And also in the mornings, you can get some spikes and some activity going on from the Swiss franc as well. So around about 8, 9 o'clock. Now you can see here that we were in a very strong and tight range for a very long time during Asia. And there wasn't enough liquidity to pick this price up to where it needs to be. And I believe this is a perfect example. I do like this trade a lot because it has a lot of lessons that we can learn here. And so I held on to this trade through that time. So I was in a drawdown for a while. So if you check on the account, I was in a drawdown and I was already at a loss, but I wasn't worried at all because I know how the price behaves. The market always does things of that nature. Okay, I was ready and prepared for it to drop a little bit lower before it took off, but it has taken off. So why did we close out? So if you look at this M30 area, this supply zone is really where we closed out. First reason we closed out is we had some news at 1:30 concerning the CPI of the Canadian dollar, and we will have a look at that. I expected it to be heavily bullish, which it was, and the price has increased by 1% in terms of CPI, which is bullish for central banks. It doesn't mean it's bullish for the people. It's quite the opposite, but it just shows us the sentiment of the Bank of Canada, which is positive for the Canadian dollar. So we had the initial spike here, and it was matched by a drop straight afterwards. Now, I will go into the specifics in a moment, but we closed out over here. So second lesson I took from today, and I believe I can share this with you and it'll be helpful, is as a trader, guys, always make sure that you have intermittent targets. So between your entry, so if this was to mark out, let's say this is entry. So I'm going to just call this entry here. All right, so entry. So if I was to start from here with the entry, right here, this was not our target. Our target was actually a lot higher. We're looking for a 0.75 to closer to 0.76 on the price. All right. So in between T1, all right. So T1 would be our first target. That's just the normal terminology for target number one. So looking at what we had with T1, I was expecting the price to give us a lot more. Okay. In terms of risk to reward, sometimes I'm not saying to throw that out of the window, not at all. Risk to reward is very important. If the trade is not worth taking the risk, do not take the trade. Like all of these trades I see some people doing where the risk to reward is 1-to-1, doesn't make any sense. If you're going to allow the market to take potentially 1% from you, then at least the target or the possibility that you should get back would be at least 5%. But again, not trying to sound, or bring in trying to sound like a bigot, but I think many traders, especially in this space, even though right now everything is mainly cryptified, but for those of us who are still in Forex, I think there's a stark difference between most people because a lot of people don't understand how the order books and the algorithmic side of the market work. And so everybody trades just patterns, okay, which is the first thing. And because you don't understand the money in the market, sometimes you may end up just trying to take a trade for the sake of making money. Okay. And saying that, we know that institutions and governments, they have the most amount of money. Retail traders have no power to move the market up or down whatsoever. Okay. This isn't GameStop. GameStop stock market, they're a lot smaller in terms of size. So there is enough money from retail traders to actually do such a thing. But on Forex, there's not a single chance that a retail trader or a group of us could decide, okay, let's all buy at the same time and the price should go long. Impossible, financially speaking, okay? Because the money in this market already is created from thin air. So if you don't have the machine, you can't really do much. So we will talk about that in more detail. And if you want more, if you find that intriguing and you want to know more, head over to the Wealthy Show channel. There'll be more content posted there too. Have a look at some of the Thursday night sessions I do. All right, they're all free. Have a look, take your pick and enjoy. We're coming back to this chart. So we closed that right over here at this supply zone because I was just having the sense that the price is not ready to continue going long. And also we had some equal lows. So for those of you who trade double bottoms, the market was definitely going to come back for your stop loss. And we have that reaction here and we can see the long that's folded afterwards. But this was the interim target, closed roughly around about here. Now I used the M1 entry to get out, or M1 order block to get out. So my M1 price action led me to close roughly around about here. So if you guys check it out, close between a range of about 74734, probably down to about 711, but not so bad anyway. Now I'm expecting the price to go long again, and I have a mark in here with the M1. If that's depending on what the price will do now, because we have the FOMC minutes, okay, foreign direct investors, big pockets, the whales, even governments themselves will be really looking into this report to see where the US dollar is. Because remember, guys, the US dollar is the world reserve currency for the world for the moment. Okay, the US dollar, if the Federal Reserve changes its course of action, many central banks will follow in tandem to their own country into what's going on, because they want to make sure they keep in step with them until further notice. Okay, so that means for that reason, when it comes to looking at price and looking at the FOMC minutes, that's why in general, US dollar news, when they're high impact, they really are high impact, and we could see a lot of action going on. But this is what the first trade that we had on, and I'm looking to enter again because I'm not done with this. I believe there's still more in it left to go, but it all depends on what the price gives us. I believe the price is going to get heavily volatile, so I'll be careful to stay clear of any of these trying to enter in too early or too late. I want to make sure I get in at the right time. But tip number 3, as I'm moving along, and I'm going to discuss USD JPY, because that was really the cause of the annoyance last week as well. It wasn't just, I guess, not focusing. USD JPY was very annoying. But speaking on that anyway, when it comes to news, guys, please, guys, do not try to trade the news, especially in a time like this. We've just come out of 2020, which was a financial crash of a different sort. Now, again, some people believe that 2020 and 2008 were the same thing. And to a certain degree, they were, because they were both financial crashes. But the fundamentals, the narratives behind the reason why the price did what it did, or the things that happened across the world happened, are completely different. And the results of what happened is different as well also. So for me, if I look at what we had in 2008, okay, the birth of Bitcoin too. In 2008, the financial crash, to be fair, it was another form of a pandemic, which was a greed pandemic, by the elites and by the big institutions. And what we had going along in that period of time, we know the subprime, I even called it subprime. We might as well call it subprime. But anyway, subprime crash that we had with mortgages, we saw that after the aftermath of what happened, or the reaction that governments had, is very important to observe. And we see that in 2008, there was a lot more printing of money, but that printing of money was internalized to institutions and to big bodies. The people never got any money. The average person didn't receive any of that printed money or that digital credit that was provided to institutions to keep them afloat. Okay, and therefore that means the supply curve, in other words, for the dollar wasn't so high. There wasn't much increase in quantitative easing or the effects of that, okay, or the weakening of the dollar. However, in 2020 into 2021, and we're still facing it in certain countries, we've seen there's been the same printing of money, but to a much larger scale. However, the supply of money has become a lot wider than what we had in 2008. And I think this is very important to understand where the news is at, and all of the news about inflation right now. And what we're seeing is that the effects of the coronavirus or the pandemic, okay, are only just beginning. Okay, we've had the physical in the sense of people from the standpoint of the virus, but now we're going to shift into the other side, where we're going to actually see now the effects from the financial system, because a lot of money has been created out of thin air, as I like to call it. A lot of money has been printed, but this time the supply is brought, across every area. We've heard for the first time in a long while, the government in the US talking about stimulus. We've had stimulus checks because of the nature of what's happened. We've had a biological pandemic, which has caused people to be forced to stay at home. It's forced economies to be shut, has forced a different way of doing life completely, and people needing the money to continue. We see that all of that money printed into the supply has caused a lot of currency devaluation, but the effects of those things will not be seen until, as we're seeing it now and moving into 2022 up to 2025 and even 2030. Okay, You know, the printing money is only a temporal solution to a much deeper problem. Okay, so, you know, especially with the US dollar, which probably had one of the largest prints of money, you know, this might actually be the trigger or the beginning of the US dollar starting to weaken, possibly. All right, I'm not saying that for sure, but possibly we could see that. And so it's important for you to understand the fundamental dynamics of price and currency so that we can make, you know, good suggestions as to what the price is doing. So I would like to see how the world is going to react. Now, you're looking at USD JPY. We had everything we were looking for. Our entry was around this area. We even had a pullback and I entered on this pullback here. I closed several times even around here because on the day that I entered, the amount of wickage that was taking place was just absolutely ridiculously annoying. Okay. And then after we had the price break beneath this area and return. Now, on the return, there was a Friday when the market opened with a gap down for Sunday night into Monday, you know, UK time. The price, we went for an entry somewhere around here and we just had a little bit of a spike out because our stop loss was just above this area. So USD JPY really annoyed us all. We had a very annoying time with it and the price continued to short. So if you check the account and you see lots of USD JPY stop outs or closes, positive then negative, this is why. We had a lot of ranging going on and I think that's just characteristic of the US dollar Japanese pen and, to be fair, Japanese pair, excuse me, and other Japanese pairs. So for me, the Japanese yen already as a currency has very interesting properties. You know, if you study into the economics of Japan, you know, the GDP of Japan is heavily weighted towards their exports. You know, that's what keeps the country alive and booming. So as a currency that, or a economy that has a currency, you know, and a GDP that's heavily weighted towards exports, the thing that you'd want to do to keep your country lucrative and competitive for exports is to have a very cheap price for your currency so that you can keep it lucrative and keep business flowing. And so that's why the Japanese yen, in a lot of pairs, if it's not in a very strong trend, you find that it's ranging a lot. There's a lot of wickage going on because that's the nature. I find the Japanese yen more of a defensive currency. They're not trying, then the aim is not to be the most dominant and strong currency. They're just trying to keep their currency lucrative and keep it juicy so that they can keep doing business with many different countries from around the world. And they do, of course, produce many, many things from electronics to fishing to so many things that they've blessed the world with their culture. Okay, so with USD JPY, now that we had this spike here, I'm expecting the price to pull back and we might get a re-entry for a short, who knows? I mean, the US dollar news, I think with the US dollar news coming out, I don't expect the reaction to be straight away. But this was the second trade. This was our recap and it was a funny recap of the price, but and the trades and what the price was doing. But we're going to continue moving and we'll hopefully catch something on this. I don't think the price has hit my target just yet. I'm looking for these double bottom lows to be run into this demand zone, and I'm hoping that the price can provide that for us. But we will see. We'll know by the end of today what the price really wants to do. But I'm trying to be disciplined and stay away from trying to trade during the news. Now, I say that because I still have friends in the institution, and whenever they make financial models for trading, whether it's algorithmic or manual, but it's mainly algorithmic, you know, the bots that they use, if you want to call them that, or the algorithmic programs that they use are designed not to trade the news. Hardly ever are they designed to trade the news, but rather to use the news as a way to get in and out of position. So for example, if they've already got profit and they want to hit a take profit, they would use the news to be able to drive the price to their targets. Okay. And so you want to trade like the big guys and not be trying to jump into a trade, you know, as soon as it hits the news time, like NFPs are 130, you're going to press buy or sell or try to straddle. Now, straddling does work to a certain degree, but still is dangerous. You know, if you've been trading for longer than 2 or 3 years, I'm sure you can feel the difference between the 2010s and the 2020s. There's a different type of market going on. So you want to adjust and be like water, as one of our senior coaches talks always says. Big T, shout out to you. So this is why we'll have to have a healthy approach to how we approach the price. So what else? Now, Euro TRY, I was in this short, and this short is a very important short to me, and I'm going to have to get back in because I got stopped out by the spread, sadly. But it's fine. I'm not worried. There are a lot of pips to go, but I'm taking this play as a more of a long-term play. I'm expecting this whole gap to be filled. There are bearish fundamentals on the euro right now, which I believe will allow for the price to really get to this gap in the future. Now, if it takes 2 months to get here, I don't mind. This is one of those trades which, if you want to call it an investment, you can, or an investment trade. I'm leaving it this trade for as long as it needs to be able to do what it does. Now, I'm a day trader by default, so it takes a lot of patience to do so, but I don't mind. It's not going to be a large lot size, but if it does work out, I was looking to go for something like a 0.10, maybe, or 0.5. It depends on the risk management. We'll try and see how we can get, how sharp of the entry we can get. The sharper the entry, the bigger the lot size I can actually put on. And if this does happen with the 0.05, we're looking at about 714 pounds. Okay. I'm using pounds on this account, me being from the UK. But if it fills this gap, which I believe it will do, would be fantastic. Now, there are features of the price to me that are making me think this way. The price running this high, the pullback here, the break of this structure. But this is not, by the way, a channel. I do not personally trade channels, but what my whole focus is on, and if you follow me on this, we have a trend line here, which is way too perfect. And to me, this looks like a trend line trap to get traders to continue going in the bullish direction. If you look at the trend line properly, the price is very controlled within the range, almost too perfectly for it to be a normal market without some sort of algorithmic, manipulation. And also the candles themselves, the liquidity is quite matched back, for the buy and for the sell. So it looks as though we have orders just being, it looks, I mean, if you were to talk about this from a crypto perspective, it looks a bit like wash trading in a smaller degree, or to a smaller degree. But I think we are going to get actually a short on here, and I'm looking to take the short and hopefully get some very good profit out of this. All right. Now, I'm not too fussed about it. There's still gaps that need to be filled. I want to get in here. If it doesn't work out, I don't mind. But this was Euro TRY, just a recap of what we were looking at on the account. Now, next trade is AUD JPY, which in fact has just pulled back very strongly. So AUD JPY, initially the trigger we had for pending order was filled and the price spiked up, gave us 20 pips, but then absolutely shattered down again. Now, I think for me, I love the Australian dollar a lot, and I think there's a lot of good things in store for it. The Australian dollar being a commodity currency, if we just take it from the perspective of what I was talking about, we do have another financial crisis evolving, and people don't want to accept it, but there is. Coronavirus has created some problems and fixed some problems, but mainly there are many new problems that have been created, or some problems that have existed for a while that have been furthered now because of sped up because of the pandemic. Now, the Australian dollar itself being a commodity currency is paired to with gold. And so if gold is going to increase in value now, as inflation continues to rise, many traditional investors, and to be fair, whether they're crypto or not, but as a safe hedge to especially those who are trying to protect their wealth from currency devaluation, are going to be buying gold. And so the more gold that isn't demanded, the Australian dollar is a commodity currency heavily weighted with gold because that's their main commodity that they actually produce. They're very heavy in the mining sector. So this would mean for us, if we see a very strong Australian dollar, we should see some strength in gold and vice versa. They're not always completely correlated because there are other, extenuating factors that can control that. But in general, I am bullish on the Australian dollar on every single pair, especially AUD USD, which I'm not looking at the moment. We got stopped out sadly, but I do expect the price to continue. We have some liquidity pools here. I believe the price would want to run to continue going long. So now this pullback for me may just be the ticket. If I go on the H4 right here, looks like we've had the price has run the previous week's low. So I want to observe the price around this price level here and see how the price behaves and if it gives us a chance to go back in for a long. I mean, I took a bit of a heavier loss because I put multiple entries. There was a gap here on the M1. Let me just be honest with you guys. So there's a gap here I saw on the M1, which I expected the price to fill, but it actually did not fill it. It came so close to it and just went the other way, which is so annoying and stopped me out. I wish I'd known that because then I wouldn't have, got out. But sometimes gaps do happen. All right. But either way, whether they happen, how they happen, most important thing is that you just want to make sure you keep your wrist tight. And as we grow this account to 10K, which we should do, I'd say like maybe a month or two, we'll give it about 2 months. If we're not going crazy, we should see some good profit on here. And we definitely probably will be doing a good, not even definitely, we will be doing a giveaway to one of you who one of our subscribers there. So moving forward with this, I do expect this to continue long, but we're going to wait and see. We have about 8 minutes before the news comes out. And so quickly skipping over before we call it a session, I'm just going to look at the news for tonight and see if there's anything important that we can grab from this and what we can glean from this, and just my last tip that I can give to you guys before I leave. So I'm going to open up this for you. Let's have a look here. And I'm just going to give you my quick news strategy. I won't take too much of your time, but let's have a look here at the news pieces and let's see what's going on. All right. So switching over. Now, primarily, I prefer to use FX Street for my news. That's my first go-to area. I just like the UI, to be honest. Nothing personal to anyone else. I just like how it looks. I used to use Daily FX, but I think Daily FX is a bit too animated for me. And I guess I've become a bit of an uncle, old man kind of style, in the sense that I like the kind of less flashy kind of stuff. I just prefer just giving it to me, just tell me the news so I know what to do, kind of thing. But it doesn't mean that I don't use the others. Now, Daily Effects is more, animated and friendly. But the quick tip I'm going to give you guys, these are my free areas that I go to for news. And I like to cross-reference them because there's news on Forex Factory. Out of the three, Forex Factory brings the news the quickest. Then it's FX Street, then Daily Effects. So what I like to do is just to correlate, number one, the news. Number two, one of the things I like to do is also to compare the impact, because the impact is also decided algorithmically and sometimes is manually, by the people who are behind the scenes running these projects or running these systems for us to use. So I always like to do a cross check. I remember one time there was an AUD USD trade that I wanted to take, and technically everything was set up already, but fundamentally, because there was news, I was not too sure. But one was saying there's low impact news and the other was saying high impact news. But I thought to myself, okay, I'm not going to get into the trade yet, even though the entry was pointing in my face, because there was one of them said low impact news. So I thought, okay, let me just wait a bit. Maybe nothing's going to happen. And then after, I just all of a sudden, when it hits 230, or I believe it was 130 at the time, the price just dropped 100 pips, hit the target straight away in a minute. And I was so annoyed. And it's simply because we had the difference between what is considered high and low. So my advice to you guys is just to always do a quick check. For high impact news only, you just want to cross-reference those. The rest, not too much. If you see something medium that you believe could be high, then you can base your idea or your plan around this. So looking at the news for the week to end this off, we've had some interesting news. Again, Japanese yen news, due to the circumstances around their currency, I've noticed Japanese yen news doesn't do so much. So I try to stay away from it. We've had interesting news come out from the Royal Bank of Australia and from the pound as well. We've seen some great performance from there. The claimant count has dropped by almost 10,000, which is amazing for April. And claimants, for those of you not too sure, in the UK, means people who are claiming benefits or universal credit, okay, which is like a support or to help them as they're trying to look for work or if they've been put out of work. All right. We've had some Euro news also, which has stayed the same, which I believe will continue for the meantime. And we had two speeches at the same time from both Governor Bailey and from President Lagarde. Now, into today, we've had interesting news again. It seems like we have CPI day today. So everything has been CPI news, which was great for the pound. And the pound really right now fundamentally is really strong. And as I said in the last video, in the weekly overview for the week, any country that's pushing towards recovery from the COVID specifically would always have very strong potential to have a bullish run, whether it's short-lived or long-term. But this is the assessment of, because of the overarching fundamentals we have of the COVID pandemic around the world, any country that's closer towards recovery and controlling it will definitely have a lot more strength in their currency. Now, the news which I was talking about on CAD CHF came out as 1% higher in terms of CPI, so very highly bullish from the Bank of Canada. But you can see the price didn't follow suit, and instead we had a reversal, which might be the entry. So who knows, guys, I'll probably do another update again tomorrow or even tonight to see what happens if we, after the news is transpired, let's see what happens with the Bank of Canada. And if the fundamentals catch up with the technicals we're seeing, we may see a very strong long on CAD CHF. All right, so we have 3 minutes left on this news. So I'll be out of your way, guys. I'm gonna go and meet up with my students to do a live training session with them. Into Thursday, we have some more news, and I hope the Australian dollar gains some strength from that. But it all depends. I'll be back again to see what happens with this, and we should come out with some fantastic results by the end of the week. So I hope you guys enjoyed that short and sweet chat. I'll catch you guys again later on. Please make sure you like, share, subscribe, tell your friends, and thank you for listening. Be blessed and take care, guys.